All right, guys, give me a little shout out here just to make sure you guys are seeing my screen and hearing me okay. All right, good, good. Yep, sorry for the short notice. I know 5 minutes with a link. Some of you are not going to make it. That's okay. We have video. I was anticipating doing this after 12, but I'm going to have to get out of here in a little bit. But you did have a warning that we'd be doing one in about an hour. What I want to go over today is just start going through the Focus 40 and talking about why these stocks are on the list. And if you guys have any tickers, so this will be a quick one today. We'll go over like 10 or 15 stocks each time we do this. I'll do another one tomorrow and break down each of these stocks, the setups, why they're on. And if you guys have any tickers you want to go over outside of that, I think we're looking at a lot of us are looking at the same stock. So here's a Focus 40 here. I just put the link in the chat as well. Jason, you're not seeing my screen. Um, Real quick, guys, are you guys seeing my screen? You should be. No computer. Okay. I thought I was sharing it. Oh, no, there. Okay. Are you guys seeing my screen now? Okay, good, good. Okay, I don't have the video up either. Not that you guys have to see me, but there we go. All right. We should be good to go now. So let's go through this. If you don't have TC2000, actually, for those of you who do have TC2000, I think it's going to be a good majority of you. Let me just give you the link. I think it's the way I can do the watch list link here. I'll figure, maybe I'll just post this in the, um, I'll post this in the chat later. Oh, here we go. Okay, share watch list. Here we go. So two ways to look at it. One, you can go to FinViz, or you can just have this watch list in your TC2000. I'm going to go over it through TC2000, but a lot of these numbers we're looking at, you can also get on the FinViz link as well, either through the snapshot, and you can look on the side here, or under valuation. I wish they gave some more revenue numbers, and I focus more on revenue than earnings because earnings can really be manipulated. Revenues, not so much. And they only do right here sales, which is basically revenue over the past 5 years. And I like quarter over quarter revenue growth and over the last year as well. But at least it gives you an idea here. So let's go through this. Now, a couple of things you're going to notice with almost all of these. First of all, this is not going to usually include a lot of the big guys. In terms of float size, uh, all of them are going to be under a billion, and most of them are going to be in the like 100 to 500 million range. Those are the stocks that really lately have been moving a lot. That being said, I do have Baba in here, which is 18 billion, and BSX, which is 1.5. But the rest of these, so there are always some exceptions to rules I have for this. But you can see if you look at the float sizes here, they're almost all in the 100, 200, 300 million range, letting us know that it doesn't take a lot of volume to push these things. These guys can really move. So a lot of these are the mid cap types, and we know, like, the Coinbase says the COFs, the chefs are really low float, 35 million. Cell H is only 133. That's why these things move a lot. A lot of these also have some short squeeze potential as well. Not all of them, but a lot of them do. So if we look at, if we filter this out, if you go into ownership on FinViz and you go to short float percentage, you can see here, we've got a lot of them, and I like to go. I like to think 7% and above is really high float short percentage, and we've got about 13 of them over that, and even 5%, and we've got a good 20, maybe even more than that, probably like 25 of them over the 5% list. So a lot of these have potential for short squeeze. This isn't a requirement to be on the list, but we do pay attention to those. Like Reddit today, when we entered Reddit. Reddit has a lot of short squeeze potential, 16%. So when we look at Reddit, that when this thing starts moving, not only do we have the natural, buying and selling, there's also potential for short covering, which can cause a significant move in the stock as well. So that was an added kind of benefit to Reddit. And I was looking at a couple other stocks, and I think that's what kind of pushed me over the edge to go with. I only wanted to add one today with the big news events tomorrow, which I don't anticipate these news events are going to cause a huge deal, but they could if the PPI surprises negatively. If What else is there? The jobs number surprised negatively, and of course, if Powell has something to say that rocks the boat, which I don't think he's going to do after the Fed meeting. But we should still be aware. We have not only one of these things on a day is something to pay attention to. We've got three in one day tomorrow, so that could be a catalyst and pump the market even more, or it could cause the market to pull back some, which wouldn't be such a bad thing if the market did pull back some, as long as it didn't get crushed. Um, all right, where was I? Okay, that was short float percentage. I got a question about short ratio. What short ratio is they take the float percentage of float short and they divide that by the average volume. I'm pretty sure that's how it calculates. The point is it's calculating shorts by the amount of volume in the stock, and you get this float short ratio. And sometimes you'll get stocks with lower actual short floats percentage, but with a volume ratio that creates a very high short ratio. And sometimes I'll pay attention to that as well. But we're going to focus more on the short flow percentage. And if you want, you can just ignore that number. All right, let's go ahead and take a look at some of these. And again, as usual, if you guys have any questions or any tickers you want to go over, just mention it in the chat. So what we'll do is we'll go over 10 today, and we'll go over the next 10 tomorrow. Just kind of why this stock is in the focus 40, and why some of the common factors with these things. So one thing you're going to notice here, pay attention to this column. Whoops. Pay attention to this column here, which is the revenue growth ratio over the last 4 quarters. You're going to notice on almost all of these, we're seeing positive revenue growth, and a lot of these we're looking at 20, 30, 40, 50% on the revenue growth. So right away, when we look at app, one of the big reasons app's in here versus maybe another stock that might have a similar pattern is the revenue growth. And those of you guys who followed me for a long time, our real focus is price, right? We're technical traders, but what you're going to find is when you see these real strong momentum trends, there are two types of stocks that put in these strong trends. One is just an industry that comes into favor, and of course, we're paying attention to those industries. And if that industry is hot and the leading stocks in there don't have strong revenue growth, that's fine. But the other thing is the momentum stocks that are these kind of mid-cap, mid-tier type stocks that have very strong revenue growth. So, look for that 10, 20, 30, 40% revenue growth. And you'll notice here a majority of the stocks on this list fit that bill. App 40%. Baba's a little different, in for a little different reason. But Boston Scientific, 20%. Cart, not quite as much, but you're going to see a bunch of these: 75%, 29%, 32%, 35, 20, and so on. Most of these are in that range. Probably actually, there's 51 in that Focus 40 right now. My guess is about 35 to 40 of them fit that bill of the really strong revenue growth. And we look at earnings growth as well, but especially revenue growth. So app, first of all, if we look at revenue growth, very strong at 40%. We look at the float size, 300 million, fits that type of stock that we're looking at. And then, of course, the pattern here. Notice here, it's been in a very strong trend. We've had fantastic volume pattern. So another thing, like if I'm looking at, it's hard to get it down to 50 stocks, actually. There's probably 200 stocks in the market that I like, but we're trying to narrow it down to a list of like the best of the best, right? And with app, it's also had very strong volume, pulled back here, and picked up on volume, but the trend didn't continue, and then held all the key moving averages. The 50 has stayed over the 200, which is a good thing, and now we're back on trend. So app fits the bill for exactly the kind of stock that we're looking at for the Focus 40. Baba's a little different. I just wanted a couple of China stocks in here. So we've got SE and Baba. Those have been two of our favorites. When China's moving, Baba tends to move very strong. And I like the overall pattern here. It's been really beaten down, the big bottom formation here. And usually when these things break out of bottom formation, they really start to run here. And then notice here, good accumulation recently as well. So Baba's kind of an exception in the sense that it's not quite the same as a lot of these other stocks that we've been watching. BSX, a little bit of an exception, not in terms of price action. The price action has been fantastic. Just that it's a little bigger stock than what we're putting on this list for the most part. It's 1.5 billion. float versus, you know, the 200, 300 million that we're mostly looking at. But it's been such a strong mover, and then had another strong earnings catalyst after this pullback that I think it's worth putting on this list. And I also wanted to get something in the medical devices, healthcare type area. And I think we've got one or two other stocks in here now from that area that I kind of forced into here. Maybe I could find some other stuff instead of BSX, but I wanted some representation of medical devices. Cart, specialty retail, kind of, you know, at the low end of that growth, but still it's there at 11% on the 4 quarters of growth. But look at here also, maybe a little bit on the low end on growth, but the earnings growth has been phenomenal here uh, at uh, at about 100, well, 113%. Looks like they're, I didn't notice here, guys, that maybe there was a little bit of sound issue, but looks like it's back. So this was maybe on a little bit of the low end of the growth, but still over the 10%, so that's fine. But look at this explosive earnings growth here. So very strong related to earnings growth. And then, you know, fits the float size at 200 million. Had been a recent IPO and is still up above the IPO high. That was key. If it was below the IPO high, I wouldn't have it on the list, but it's still above the IPO high. And has been a strong mover. A lot of volatility here. You know, recently moved from, you know, 35 to 45. So this one is on the list, and that's specialty retail. I'm looking to add more specialty retail on the list. We do have some specialty retail in here, but I'm going to be adding more to this, and we'll probably have to take something out. Regional banks have been strong, so we can see cash here right around 10% on the revenue growth. Earnings growth, not quite as much, but this has been a very strong mover here. So you can see the trend. In terms of relative strength, it's at all-time highs. So there were actually a couple of other regional banks, and I don't need a ton of regional banks in here, but I wanted a couple. And cash had a strong earnings reaction at all-time highs. So that one fits the bill. Cell H, another one that is kind of an exception in terms of overall pattern. This is not near highs, has not been a relative strength stock. It was a very strong stock before its big pullback here, but it's come back strong, has had two very good earnings reactions, is breaking the bottom formation up over the 200-day moving average, and very good accumulation through what was really interesting with Cell H. And this is what you always want to assess in a stock that has been very strong and then has a deep pullback. Look at the institutional ownership and what type of selling you're seeing. And notice here, this is a pretty significant pullback here, right? Went from, you know, 97 all the way down to 21. But institutional ownership was still strong. And also, it looks like I'm breaking up for you guys a little bit today. Hopefully, that gets taken care of here. But even in this deep pullback, not a lot of distribution in here. So I like this as a bottoming formation. Chef here, 7% growth, maybe on the low end of growth, but still we're seeing quarter over quarter growth. And then look at the earnings growth, 71%, very big. And then this is a low floater at 35 million. Food distribution has been very strong. And then look at the relative strength here, extreme relative strength. So Chef, I like a lot. COF is another bank. This is a bigger bank here, and you can see, even though it's a bigger bank, Capital One Financial, notice here its float size is still on the low side at 370 million, and it has been moving with a lot of volatility and showing relative strength at highs. So I like this one. Coinbase, of course, I mean, look at this revenue growth, 75%. Interesting that its earnings growth is only 5%, but it's got a lot of sales. So sales is what you really key in on here. So it's got some earnings growth, but really strong revenue growth. So, you know, when you see these stocks that might have negative earnings or even slightly positive earnings, and you wonder why these stocks are going up, it's because of their revenue growth. So when you see 75% revenue growth, you know that this, you know, eventually, if this continues, this earnings is going to start to change. And of course, we all know Coinbase is leader in its field. Float size is still pretty small at 245 million as well. And that's why this thing can really pop, has some short squeeze potential as well. And recently broke over the 50-day moving average. And we also know it just got included into the S&P 500. So all of these factors make it obviously a fantastic stock to be on our Focus 40. We all know about CrowdStrike has been one of our favorites. Look at the even with that debacle with that software glitch a while back when it made this big rundown here in 2024. Look at its revenue growth, 30%. Um, Earnings growth doesn't matter. Revenue growth is very strong, and that is why this stock has been a momentum leader and at all-time highs. So very strong stock here. And then Carvana, we can see here. Notice here after this big bottom formation in 2023, we are getting very close to the all-time high here at 385. We're still at 308. So we still have a good 70 to 80 points before we hit the all-time high. Real quick here, guys. The last message I got was from Anurada saying that I was breaking up. Am I still breaking up, or are you guys hearing me okay? Okay, it's all good. Okay. Sorry about that. I've been having some internet issues throughout the day, a little bit for some reason. Okay, so we've got strong revenue growth with Carvana, 30%, has good earnings growth as well. Again, fits the bill for the float size, 175 million, perfect. And a momentum leader, and obviously showing extreme relative strength. I considered Carvana today, but went with Reddit. I decided that I'll wait to see if Carvana pulls back a little bit. Cybersecurity has been very strong. Cyber is a leader in the field. Not so good after earnings here, so we'll watch for a potential earnings reversal on cyber. But again, fits the bill, 35% revenue growth, only a 50 million float size. And when this thing runs, it really runs. Remember last year we were talking about the box breakout. When it broke that box around 294, ran all the way to 420. So what is that, like a 35, 40% move there? Had the pullback. 50-day moving average stayed above the 200 and still above the 50-day moving average. We'll see how it reacts to earnings. If it continues to pull back hard, maybe this is one of the ones that I take out for one of the other stocks I want to put in. I'm going to let me ask what you guys think. I'm purposely keeping a tight list that we can go to and make most of our trades out of. Obviously, we can have exceptions to it if we see other stocks that are interesting now. And of course, always big tech. I don't put big tech in here. Do you guys want me to keep it between 40 or 50, or is it okay if it kind of expands to 60 or 70? Maybe at some point it gets wide where what's the point of it, right? That we want to keep it tight so we can just keep going back for trades in these setups. Almost exclusively all of you want it small. Okay, that was my thinking as well. So I'm going to keep it at 50. So we're going to have a rule here that if I want to add something, I have to take something out. All right, good. All right, DoorDash is another one. We've gone over 13. Let's do 15 today, so we'll go up to Duolingo here. DoorDash here, you guys know we've been obviously paying attention to DoorDash. 23% revenue growth, 170% earnings growth. Float size right at 325 million, so good. Before the market pullback here, it was a very strong momentum stock. Pulled back, held all the key levels, and notice a lot of these. The 50 stayed above the 200, never crossed like the market did. And then here, still above the 50, even after its kind of poor earnings reaction has come back very strong. Now, remember with our earnings gap down strategy, there's three spots we look at. One, if it gaps down and continues down, we look for that reversal candle. If it gaps down and immediately pulls into the gap, we look at that spot. And then if it ever does push up all the way, we look for the spot before earnings, that gap fill. And DoorDash is getting to that point now. Here is the pre-earnings gap fill at about 200, and it's round number 200 as well, sitting at 196 here. So I'd watch this level closely. If it breaks 200, it's almost a no-brainer, as long as you're depending on how your portfolio positioning is. But if you have room, I would definitely consider DoorDash here if it breaks 200. Dave, this was a new one for me. I hadn't really paid attention. I should have been because it had been on my IPO list for a while since it IPO'd, but I hadn't really paid attention to it. But this is classic IPO formation, right? Where they IPO 1 or 2 years, they kind of bottom out, then they go on momentum runs. Eventually, if they break their IPO high, that's where you get these huge moves. But it's making its way back to its IPO high. And more short term here, extended. We can't do anything with it. But we'll be watching for good entry points. 255 million float, 40% revenue growth, 1,400% earnings growth. So exactly the type of stock that we want to be trading and in our Focus 40. and it doesn't look like it has a ton of. It at least doesn't have 5% short float. So maybe I thought that this feels like short squeeze here, but it doesn't have a lot of short interest. Okay, last one for today, Duolingo. Um, 39%, practically 40% revenue growth, 100% earnings growth. Fantastic pattern. Common theme here, right? Momentum stock pulled back, 50 stayed above the 200. And I keep mentioning that. This is why this is what the market did, right? The 50 crossed below the 200, and a lot of poor stocks did that. And most of the stocks on our list here, the 50 stayed above the 200 or recovered very quickly. What we DeLongo. So back to DeLongo. So momentum leader, obviously very extended now. Unless we were looking at a quick run or short to the long side, nothing to really do with it now. But we'll continue to watch it for potential setups in the future, and look at all this good volume coming in as well. Look at the CMF indicator. Even when it pulled back here and had this earnings gap down, the CMF indicator stayed at the zero line and now is still strong. This has spent a lot of time above the zero line, just indicating money flow is very strong in this stock. All right, so we've gone over 15 of the 50. We'll do another 15 or 20 tomorrow, and then on Friday we can do the rest. So we'll have kind of had a breakdown analysis of all of the stocks that we've put in here. Then, as usual, over the weekend we'll study it, analyze it, see if we want to take anything out. There are there are a few that I really like that I want to add to it. We talked about it in the report today. Here's ARM. You can see why I didn't put ARM and show some others. It's a 1 billion. So it's 1 billion, but I really like semiconductors right now. We talked about that. We're looking for semiconductor stocks to start playing now after we've been ignoring them for a while when semis were getting hit. Affirm, another one, software infrastructure related to fintech. And you can see here the reason it didn't make the list initially was it was showing relative weakness. And notice here, even the 50 kind of crossed here at the 200. But I really like the action now, and it's come back very strong. So this could potentially be added as well. And then RGTI, obviously here we're paying attention to quantum computing stocks. And this one has been very strong and kind of fits the bill for a lot of the things we're looking at for to put in the list. So this is the one I'll probably add if I'm going to add anything to our Focus 50. All right, guys, that's what I wanted to go over today. Just kind of go over, break down these stocks. We'll do the next 15 tomorrow. And then remember, tomorrow we have a lot of stuff going on in terms of news events, three big news events, related to inflation, jobs, and Powell. So we'll see how that impacts the market. If there's any negativity, this is a spot where the market could really pull back. This is what happens when markets get extended. If there's some negativity, oftentimes we'll see a quick pullback, which we would actually like, because then we could, as long as we stay above the 200-day moving average, it sets stocks up for kind of next runs on these stocks. All right, guys. See you guys tomorrow. Talk soon.